Hey everyone, Jason Sherman here. In today's episode of Zero to CEO, I have with me a Web3 infrastructure builder, James Bailey. Welcome to the show.
Thanks, Jason. Thanks for having me.
No problem. And we're talking about an interesting topic today, fundamentals of building a Web3 SaaS business. Let's start off with how we're in the middle of a supposedly bear market crypto winter, and you guys are in the middle of a Web3 business. Where do you see the market going over the next couple of years? And is it smart for companies to just keep their heads down and work on a Web3 product?
Yeah, so obviously, as you said, we're in a bear market. There's no denying that right now. And that's universal. It's not just within crypto. I think you can look at most tech stocks out there and everything's a little bit down, right? We're heading towards recession. This is actually interesting, one of the first bear markets in crypto that is tied to kind of the macroeconomic markets. So it's a bit different in that way. For us in the ecosystem, really all you can do right now is continue to put your head down and build, right? There is capital out there still. It's not as easy as it was back in November to raise money. People were raising obscene valuations back then. But for us in the space, just keep your head down. So I think that's relevant for everyone building a startup, whether you're in crypto or not. At the moment, it's the time to put your head down, build, work on your fundamentals. Being able to build a massive product that's going to require huge amounts of capital to survive is probably not the best thing to do right now.
And speaking of that capital, there's like, in 2017, a lot of these companies were using ICOs, initial coin offerings. It was their version of the IPO to raise the capital for their money and for their company. And a lot of those companies fizzled out and disappeared. And then there's like just a venture VC way of raising equity and getting money that way. So what is, in your opinion, the right way to go for Web3? Is it, releasing your own token and trying to sell coins to make money? Or is it still the venture capital route? Which one would you say is better?
I think it's a mix of both, right? Back in the 2018, 2017 days, you could do an ICO, or you could perform and carry out an ICO, initial coin offering, without really anything built, right? With just an idea and a white paper.
Yep.
And a fancy website, which is pretty silly when you think of it. So in this
silly, but everybody was doing it though.
Everyone was doing it, right? Because in order to build an idea, you had to fund it. These days, we find a hybrid of both, right? There's usually the VC capital coming in for early stage companies. A lot of VCs only do small checks for early stage businesses. But the expectation is for most of these companies to figure out their token utility and to launch a token down the road once they probably have a little bit more in place. So we saw many token offerings, not technically an ICO, but a token offering of some sort, public sale, TG, token generation event, earlier on last year, and that's still kind of a preferred way to go public, if you will, or to kind of go big.
And you still have to you still have to follow like the SEC guidelines, right? For this, you can't just release a token and raise money. Like you still have to follow some sort of regulations, right?
That's a situation, but most of the companies avoid having to look at SEC by preventing any US citizens from participating in these token sales, because SEC is kind of just so far out there in terms of its legal requirements. They fall with like China and US and Iran and all the other big bad countries in terms of just don't legally touch those spaces because it's dangerous.
So there's definitely a lot of legalities, but also rules and guidelines. And it's very technical, like blockchain and Web3 and crypto. It's all very new because it just came out, just a decade ago or whatever. So when you say the fundamentals of building a Web3 business, what are those fundamentals? Like, what are the top three things that a startup entrepreneur or, someone who's interested in blockchain or Web3 would have to do?
Yeah. So as I said before, right, it's become more and more of the importance of actually building a product that works and shows transaction volume trading, or shows a lot of volume in it. Usage essentially is pretty critical these days, which is great, which is a good thing, right? It's a good thing for any kind of business, is to show that people are actually using it. But I think the one thing that sets blockchain apart from the rest of the world is the two things that set it apart. One is that token utility. A token is both like the ticket to enter the place and also like the share price of your entire network, right? So it's kind of the total valuation of your project. So figuring out a way that allows you to, that allows people to use your token to interact with your product, but also ideally will push the price up as more people use it. Are two kind of competing things that you have to design very carefully. Thirdly, the other thing that's unique to crypto is the community build. You have to build a huge community in the space, which is really interesting, right? When you do startup in the traditional Web2 world, community is an afterthought, right? Publicity is an afterthought. You kind of get it to kind of, you announce stuff at a big milestone, and blockchain, you really have to build a community for many reasons. And that may mean you need to hit like 50,000 on Twitter, 30,000 people in your Discord. And to create those numbers, you really have to engage with them. You have to be more in person every week, kind of fronting up and explaining what we've done, why we did it, and what we're doing next.
And you got to make a lot of funny. You got to make a lot of funny memes too, because if you don't make funny memes, no one's going to care, right?
Well, you just have to be more engaging, and whatever this zeitgeist right now, you have to kind of participate in, right? A lot of memes, but also just a lot of being upfront. But
you touched on the token having a value too. Like I noticed a lot of companies, crypto projects, they allow people to use the coin or the token to purchase the service that they're selling. Like let's say cloud storage, for example, you use the coin to pay for like a terabyte worth of storage. So that to me is instead of being vaporware, it's an actual product that you can use, and it has a justified price to that coin versus, some other coin that doesn't do anything. And it's just like, you buy, Shiba, Doge, Elon, Inu or whatever, and then we're going to make it worth money from liquidity. So how do you choose the utility for the coin? How do you come up with that? Is it just the same as like making a startup idea and then saying, well, now the coin will pay for that service?
Essentially so, but you really have to be quite, you have to think very carefully around the incentives that you design it. So when you design a blockchain or a decentralized project, you're building the incentives, right? So the example you gave is I use a coin to pay for storage. You want to figure out ways to allow that, but also probably to remove as much liquidity from the supply as possible, because liquidity generally causes more volatility. So
you're saying like keeping a lot of the coins in like cold storage. Okay.
Well, not cold storage, but just
locked away for the project.
Well, incentivize people to hold on to them and not trade them freely.
Okay.
So there's a lot of like competing different ideas that you kind of want to optimize the economics for. And that's one thing that we need is more economics people, right? There's one class that I've done that's been very useful in this space, and it was like a high school course in macroeconomics, because it's like so critical to how you design and interact with the token. It's quite interesting.
People just say moon, price go up. They don't really know much about the economics.
The worst thing about our ecosystem or our industry is that it's tied to a value, and that value is so transparent, right? It's so there you can trade a coin and instantly and get value out of it. And that it attracts a lot of really smart people, but also attracts a lot of very hypey people. Yeah. People that are driven by the hype, or driven by the get rich quick. Well, in a way, a winter is a good situation to shake those out of the tree. And the people that are building in the space, which are many of them, can keep focusing on doing what we do without the distractions of people yelling "win moon" or "win Lambo."
Yeah, people they're not really interested in the products behind the companies. They're more interested in just earning profits. And that's the big problem, I think. You mentioned having a big Discord and a Twitter. And I noticed a lot of the NFT boom last year was all about getting that huge Discord, huge Twitter, fast, and then selling NFTs, and then joining us on the metaverse and Sandbox, Decentraland, and all these big virtual worlds are starting to kind of pop up. So is this kind of all part of where Web3 is headed, is having communities in not only Discord, but also in the metaverse, and then having people like host events and having utility for the coin to enter? You said it's a ticket to enter, right? You said kind of in the beginning. So is that what we're going to start seeing?
It's certainly a attractive thing right now. And I think it certainly helps. People, humans like being a part of something, whether it's a political party or the golf club you'd go to every Sunday, or it's an NFT place where you can talk about how your favorite NFT is going to take over, whatever. Like people like being a part of something bigger than themselves. So that's kind of what you see developing here. And this is one thing that we tap into with communities is that, okay, this is our vision, this is our mission. You're a part of that with us. You're along for the ride with us. So I don't see this kind of drive to build communities. Obviously, I think there's a little bit, you kind of miss, I don't know, like if that's true. I'm sure some people, create a community for the sole purpose of being able to shill NFTs to them. But I'd like to think that a lot of people put more better approaches or nicer approaches than that.
And so there's so many competing companies out there. I mean, if we just put aside NFTs even, yeah, there were like 1 million of them and they all looked the same. There was frogs and toads and dogs and cats and punks and this and that. Coins are the same thing. There's like 10 privacy coins. There's like 10 storage coins. There's 10 this. So how do you grow your community and market in those saturated spaces? How do you differentiate yourself? How do you get a community? It's not that easy, man.
It is not easy. No. Where we are is like 97, I think, where there is so much growth in this internet bubble. And everyone's like, wow, I could build this or build this. And there's about 4 variants of pets.com. All trying to create that niche because it's brand new land grab. It's all kind of new ideas. You're doing the same as someone else, but there are many, and you'll know this, Jason, there are many reasons apart from technology, apart from the right time, that results in the business being a success and one being a failure, right? There's a lot of luck. There's a lot of, other stuff as well.
So you think we're in the AOL chat room phase. We're in 1997. Amazon, Google, eBay, they just came out. There's another 100 websites that are about to die in 2 years. Nobody knows which ones they are. Pets.com is one of them. And so we're at that phase where we're figuring out which players are going to win and which ones are going to die. Even though like 2017, 18, we lost a lot along the way there too, because those companies are all, and then we have all the ones
that was a tiny, like compared to the size of the market right now, that was tiny.
So we haven't even seen the tip of the iceberg.
It feels for us in the industry that we are kind of around then. There is still a lot of crap out there. There's a lot of people doing the same derivative thing, but there are a lot of new ideas coming through. There's a lot of real smart people in the industry, right? I know a lot of people we did a lot of work with Berkeley University, and they have this Masters of Financial Engineering course, which was historically designed just to send the smartest people to hedge funds. But you're finding, I was talking to the course coordinator, and she was saying that a lot of them are going into crypto at this point in time.
And when you say crypto, you mean they're going to like the blockchain route, right? They're using Solidity potentially, because let's touch base here for a second. We have a number of programming languages that are like either on the Ethereum network or Polygon, Formatic, and et cetera, et cetera. And these are, again, complicated new programming language that developers now have to learn, right? And they're also not very easy. I've tried to do a little bit of it. It's not easy. It's not like JavaScript and PHP and HTML, CSS. We're talking about some complicated stuff.
If you're a young software developer right now, there are like 2 leading edges of software development in terms of like where the most high-tech development is right now. It's AI and it's blockchain. So it's naturally appealing to a lot of people. Yes, there's a quite new, quite difficult coding languages. Solidity is a pain in the ass. Rust as well, which is also another coding language, and blockchain is quite difficult, but it's also very high performing, and a lot of other industries are picking up on that. It's like C++, but nicer. Or C, but nicer, sorry.
Right.
So yeah, it's still a little bit hostile. And I guess that's why I say I characterize where in 97 is because like, even though you see a lot of these cool websites, on the face of it, see a lot of really splashy brand names, a lot of really kind of shady things. There's actually a lot of infrastructure beneath the scenes, a lot of like tools that developers need and use on a daily basis, like the Stripes of the world, or Mixpanels, or the ways you notify people, all these different other services that other companies require and use to build. And we haven't quite built those yet. or we're still working on those.
We don't have like a
There's
word.
still
We
a
don't
lot of
we-
like
like
under
a
the
WordPress.
hood stuff that we're working on at the same time.
Yeah, I know what you're saying. Like Stripe for payments. Like, well, there is Utrust for payments, which is pretty big so far. But there's no WordPress for blockchain as far as I know. So I get it. And AI and blockchain, you put both of those together. I'm noticing those companies are really pushing those two at the same time, right? Because like Agrello with using AI for legal documents, right? So on the blockchain. So there's a lot of cool stuff out there. So what exactly does subquery.network, which is your website, subquery.network, what do you guys do exactly? And how do you work in Web3?
So essentially, we're one of those infrastructure companies, and our focus is on data. So blockchain it's a chain of blocks from the name. It's actually a really bad way to store data when you want to query that data. So the reason why is because every bit of data is split across all these individual blocks, and you can't like scan all the blocks at the same time, right? You kind of like peek into one at a time. So if you want to like ask a question like, what was the last 10 transactions I've made? You don't immediately know what blocks include a transaction that I made, right? You have to go through it like that.
So you're like a search engine for the blockchain.
It's a search engine for the blockchain.
That's very interesting.
It's a way that you aggregate data and use it in applications. So if you're building a front-end application, which a lot of these applications are doing, like an NFT marketplace or a DeFi application or wallet, you need access to data that you can't get directly from a blockchain. And Subquery as a service is an open source service that allows you to do that. It allows you to do that both in a custom way, a flexible way, so you can get whatever data that you want, but also in a decentralized way. So that indexing process to collect that data can run in the background, and anyone around the world can do that. And it's decentralized in that way. We don't have to rely on a centralized service to do that collection.
Love it, man. Subquery.network, guys. Check it out. Search engine for blockchain. Who would have thought, man? And we definitely need that. So that's really cool. James, thanks for coming. I appreciate it. Is there anything else you want to tell the world in terms of what they might expect in the next 5 to 10 years?
I think you'll see a lot of change. I think you'll see a lot of, as you say, companies going down, maybe running out of steam, realizing that they were just a derivative copy of something else and they're not going to survive. But I think you'll also see a lot of, I think we'll hopefully in the next 5 years see the first applications that really anyone can use that interact with blockchain, and probably that you don't even know that they do. So we're kind of at that point where accessing the internet has become a common thing to do.
Interesting. I agree. Blockchain will be huge 5 to 10 years, like HTML, right? So here we go. Awesome. Thanks again, James, subquery.network, and I'll see you guys all in the next episode.